Hi, I'm Andrew Howard, Chief Investment Officer here at Catholic Super. Welcome to our December quarter investment update. It's great to report that we delivered another year of strong returns to our members. Our default My Super option returned 10.15% for the year to end December 2025. This is the third year in a row that we've been able to deliver double-digit returns to you, which is really pleasing. For our members in our higher growth options, the results are stronger again, with the Growth Plus option returning 12.53% for the calendar year and an exceptional result of 13.44% per annum over the 3 years to end December 2025. It was yet another year where global share markets delivered strong returns, with many global share markets ending the year near all-time highs. However, it wasn't a straight line over the year. Following the initial extremely negative market reaction to President Trump's tariff announcements on what was labelled Liberation Day, we saw an extraordinarily sharp rebound in equities over the rest of the year, helping us to deliver these exceptional results to you. Over the course of 2025, while the US market and the Magnificent Seven dominated the headlines, it wasn't this small cohort of stocks that were the strongest performers. Share markets such as the UK and Japan, as well as the Emerging Markets Index, all outperformed the US market over the year. Of the Magnificent Seven names, only 2 of these 7 stocks, Nvidia and Alphabet, outperformed the US market in 2025. Closer to home, the Australian share market lagged many of its global peers, with the ASX 200 returning 6.8% compared with 16.4% for the US S&P 500, partly due to our market's lower exposure to fast-growing AI-related technology stocks. It highlights the critical importance of maintaining a well-diversified portfolio, with our strong returns delivered from exposure to mid and small cap companies, emerging market equities, and strong results from the infrastructure and alternatives asset classes. With share markets ending the year on a positive note and investor enthusiasm remaining buoyant, looking forward, company earnings remain key. Expectations are for continued positive earnings growth in 2026, up to 10 to 14%, which is high by historical standards, leaving little room for disappointment. The US economic backdrop remains mostly resilient, despite the tariff-related uncertainty. In the US, growth is expected to remain solid, driven by consumption and tax incentives. Inflation is trending down, and the labour market is showing some signs of weakness. Favourable conditions for the US Federal Reserve to continue lowering interest rates over 2026, something investors will require to justify markets moving higher from here. Some of the key watch points on our investment radar going forward include looking for a continuation in the strong momentum of company earnings to support already stretched valuations, any signs of a slowdown in AI-related investment which could weigh on markets and the broader economy, ongoing geopolitical tensions with the Venezuela intervention and ongoing rhetoric around Greenland potentially impacting on investors' nerves, and finally, the path of US inflation, which will play a major role in determining how fast the US Federal Reserve delivers on the expected rate cuts in 2026. While investor confidence is still reasonably positive, and our members have enjoyed 3 years of positive double-digit returns, we approach 2026 with a sense of measured caution. We maintain that this is no time for complacency, as the range of outcomes from here is wide. Effectively navigating through a potential period of heightened volatility will be key to ensuring we can continue to deliver a consistent pattern of returns in both rising and falling markets. To do that, we believe maintaining our well-diversified portfolio that has delivered positive returns to our members over the long term will continue to play a pivotal role going forward. Thank you for trusting us with your super. We'll continue to keep you updated on how our investments are performing throughout 2026. For a more detailed review, please join us for our upcoming investment webinars taking place in February. You can register via our website. We'd love to see you there.